welcome to the Closing Beat, everybody. Happy Wednesday. How you doing today? Hope you're having a good day here. We got a lot to cover today, so we're going to jump right into it. We're also playing a game. It's called Guess the Dow. Just go to the website there, place your guess. If you guess, we'll give you $100. You get the drill if you've watched the show for a couple days in a row. I mention it every day. We're also financial advisors. The reason we're here is just to update our customers and update all of you on the days going on in the stock market. So we're definitely going to cover that here today. By far, the biggest news of the day is the Fed cut interest rates by a quarter point. Lots going on there, and that has the Dow higher by 38, S&P higher by 1, the NASDAQ lower by 8, although it almost got positive there before the end of the day. You know that Mr. Jerome Powell actually doesn't do too well there. 2 of the last 12 Fed meetings, the market's actually been lower on his rate announcement day. Now he's 3 for 13, right? I'm sorry, 3 for 12. He's 3 for 12 now. Because the market S&P technically finished positive by 1 point by the end of the day. So look, rate cut, 93% of the traders actually everybody, as of yesterday, everybody was betting on the markets or the Fed cutting rates. The Fed did cut rates, and so awesome. The Fed said, we're cutting rates in light of the implications of the global developments for economic outlook as well as muted inflation pressures. That's fancy, man. I went to some school and learned that kind of language there. That's impressive there. So basically they were saying, hey, look, the data that we have, all the sort of interviews we've done all around the world, what we see going on with trade, that uncertainty there, we don't know how to respond to that. Brexit was mentioned in the mix there. Inflation being lower than expected, all sort of, well, and add to that the mid-cycle adjustment. They still kind of carried forward with that talk. All of that sort of let them believe that maybe they should cut rates again, and so they did. Really no solid stance on whether they would cut again in December. Basically, Mr. Jerome Powell was sort of like Dad saying, hey, you can eat the candy. It's 11 o'clock at night. You can eat the candy, but don't get too used to this. That's essentially what they were saying there. So because of that, you got basically a flat day in the markets. Now, why is the day flat? Basically, we got everything we expected. The rate cut was widely expected, but the comments that revolved around it also expected. There was no comment of, we are not cutting rates anymore, or we are going to cut rates. It was sort of what everybody was thinking he would say, and for that reason, the markets were flat, right? I mean, although we were down like 20 points on the S&P at one point, we still finished the day flat, so all looking good there. The S&P 500 actually closing, just kind of hovering around that 3,000 number, which has been sort of in play. You can see 3,006 there to wrap up the day. And so what does this mean? Fed cut rates. Okay, we've been talking about it. What do we sort of expect from it? The average gain the next day is 0.38%. Average performance 1 month later is actually a loss of 1.24%. We covered this yesterday. Add to that the sort of September volatility there, and those are your stats, right? So it's basically what I have to offer for you there. Other news that came out today, the housing starts and building permits, way better than expected. If you happen to pay attention to some of this stuff, the housing permits and building starts just demolished expectations, much higher than expected. But if you dig in further, what you find is all the actions in the multifamily area there. So multifamily as a portion of those housing starts and housing permits was 32% month over month. As far as the multifamily starts. Now, that is the bulk of all the excitement that you saw inside of that number. Also, multifamily permits were up 13.3% month over month, which just dwarfs single family if you happen to dig into that. Now, housing permits is seen as sort of a leading indicator. So if you just don't want to dig into all that stuff, I never can tell if you guys care to look into these econ numbers or not. But if you don't want to dig into it, basically know that the building permits is seen as a leading economic indicator. So obviously very positive there. That gives positive sentiment going into the market. As far as people thinking the economy is slowing down, just not the case, even though multifamily was certainly part of that deal. All right, here we go. Going over to the charts here while we can. So here we go. S&P 500 hovering around those all-time highs there. Got the Fed out of the way. We don't have earnings season. We got nothing going on. So we have a recipe for a market to sort of bleed around for a while. We could either just continue this uptrend higher or sort of be stuck at 3,000 for a while until we get some more headline catalyst type news. For right now, we just don't have it, but that's okay. NASDAQ sitting around those highs as well. The Dow was higher on the day by a few points. So you can see we're all basically in the same area, waiting for the markets to kind of do their thing. In the meantime, it's quiet at highs would be the key word there. Bonds, there you go. Bonds were higher a little bit on the rate cut there. You had a little bit of flattening. I bring this up every now and then, the 10 to 2 year, a little bit of flattening there, meaning the 2 year actually spiked a little bit higher today. It'll be in the scroller up top there. 2-year spiked a little bit higher as far as the price goes, and 10-year was just a touch lower. I have, did I put up a chart for you guys? Let me go over to this guy here. Hey, here's it. This is the chart I want to show you. So this is basically the spread between the 10-year and the 2-year. So the further up it is, the wider the spread is between the 10 and 2-year in a normal basis. As we start approaching this 0 line, can you see it? Yeah, 0% shows that there is no spread, meaning that they're exactly even. And anything below that says that the 2-year is actually trading higher than the 10-year, which is sort of abnormal. Well, over the last week, we had this nice little rally up there. Today and over a little bit yesterday, you can see that we're pulling back to having a tighter spread, right? So if we were to plot these two individually, you would just see they got a little bit closer. That's it. It's just a bad sign. Overall, people don't like to see that sort of thing. So it's going to bring back in the whole inversion concept again. We'll see what happens there. But with the rate cut and everything, you got the dollar higher. UUP is an ETF you can use for that. Just a small gain on the UUP. We'll look at the price of gold. Here's the gold futures contract, just a little bit lower on the day. Also, you have things related to it. Gold miners, GDX is an ETF I know a lot of people like to use, down about 1.75% on the day. Silver a little bit lower as well. So chopping around there, continues to be a pretty volatile area. We go over to oil. You got it down another 1.5%, the whole mean reversion thing. Massive day on Monday, right? The market's held in there, but we've been pulling back a little bit on the price of oil. So that continues today in all those sort of sensitive areas to oil. Your XOP, oh, can't type it. Your XOP, there you go, just a little bit lower on the day. Your energy stocks a little bit lower on the day. Oil service stocks, all of these sort of categories. If you didn't know these ETFs before, boy, you're getting some experience this week, huh? They are all over the place. So you got anything related to oil or the delivery, the drilling, the equipment manufacturers and everything, just pulling back a little bit on the day. Not too big of a deal there as far as today's performance. Overall, yeah, that's quite a pullback in general there. So that's oil and that area of the market. Some of the headline news today wrapped around transports. Or transports are kind of seen as that sort of economic barometer, if you will. Transports pulled back today 1.2%, but it's all going to be because of FedEx, right? So FedEx reported earnings, just horrible, really horrible, everything that went on there. So FedEx is the second largest position in the IYT. It makes up just about 10%. So because of FedEx and pretty much only FedEx to kick things off, you got IYT a little bit lower on the day. I did look up UPS, which is like 6% of the IYT. It was down a little bit, just sort of in sympathy with the FedEx play there with what happened on the day. And UPS, I think is, like I said, 6 or 7% of the IYT. Someone can clarify on that one. So transport's down a little bit lower on the day. Financials kicked in towards the end of the day there. Right after the conference finished up with Mr. Powell about 3 o'clock, actually 3:07 if you want to be exact. Financials started kicking up higher. That helped spur that market rally into the end of the day. If you want to see, maybe we could just use like a 5-minute chart or something just for fun. Here's, let's use the SPY. There you go. So what you're looking at here, this is the Fed announcement, right? All the excitement right on the rate announcement. Then we got the conference going on. The market's kind of sitting back listening to his words. And as he wraps up the conference, that's when we started that rally. Started in the financials. You saw tech start to come and play a little bit there as well. And that's what brought the S&P back towards positive for the day. Normally we don't look at things like that, but just a little fun action to share with you. What else? You had small gains, consumer staples. You had small gains in the semiconductors, SMH, just a tiny little gain there sitting at highs. Remember, that's supposed to be one of the better performers over the next 5 days, average 1.65% gain for that one. So far looking pretty good. So that's that. Let's go back to FedEx real quick. So FedEx reports earnings. You could see the stock off the charts, actually. Basically off the charts. There you go. So I don't even know if I can show you. I guess I have to go over here to do this. There you go. I got to bring it back into view. You can see the move today down 13% for FedEx. Here's the deal with that one. If you like discounts, boy, you got a discount today back towards those lows. They missed on earnings, missed on revenue. They lowered their full year forecast, but not by a little bit. We were expecting like $14 a share, $14.60 something. I didn't write it down. So we're expecting like $14 a share for the year, 2020. And instead, they come in and they say, we're thinking a little bit lower, 11 to 13. That's a huge difference for a company like FedEx. If they would have said, you guys are expecting, 1460, whatever, and we're going to come in at 1440 to maybe 14, okay, that's okay. That's like a little bit off. Those are rounding errors, if you will. But 11 to 13 earnings per share, not very good. So stock price loses 13% on the day. We look back, this is the 9th time that it has lost more than 5% on earnings day. It's actually only lost 10% on earnings day 2 other times since 2000, right? So you got to go back almost 20 years to find only 2 other times that it has fallen 10% or more. Last December, ironically, was one of them. So, I mean, it just happened there. There it is right there on the chart. Well, you can't see. There you go. Here's the last time here, this last earnings announcement. In December, and the previous one, you got to go back to June 2002. Now, typically, FedEx is highly correlated with the S&P, but if you happen to look at things like this right now, there's something really interesting going on, and I pulled this chart up for you. Let's go over here. Here is the S&P in orange and the FedEx in purple. So we're going back all the way to 2003, I believe, is as far back as this guy goes. No, 2000. So here's all the way through 2000. You can see that basically it's correlated to the S&P. All of a sudden, we've got this disconnect over the last few months between FedEx in purple and the S&P in orange. Huge spread there, right? Is that like a pairs trade idea? You guys like your pairs trades out there? I did a video on pairs trades before. I just thought I'd point that out because that's typically something that you just don't see with FedEx and the S&P. So just sharing kind of an interesting chart with you. I just test things every now and then on you and see what you guys think, if you like these things or not. Let me see. We'll go over back to the charts here. A little disconnected today. Something feels a little off, right? No? A little bit off? All right, Adobe reported earnings as well. Beat on earnings, missed on revenue. They, talking about their current quarter, they just lowered the forecast there. I don't think it was hit too hard, maybe like 2% on the day. It was Adobe. Yeah, not so bad. 1 3/4%. Held the 200-day moving average. That's all the technical traders are going to look at in there. So that, there you go. There is Adobe sitting at the 200-day moving average, getting at least that temporary support. General Mills lost about 1% on the day. They beat on earnings, missed on revenue. They said, look, sales in North America are fine, but sort of around the world, we're having a little mixed results. If you dig into them, you can kind of see where the mixed results were. Stock a little bit lower on the day. Southwest Airlines actually poked up to new little highs here in the short term. They said despite the 737 grounding of their planes that they still can't fly, they're expecting you know how they give the current quarter forecast? They're expecting to meet that. Everybody's been waiting for the day that they're going to say, we're not going to hit those numbers. They actually said, no, we expect to meet that. Today they announced that. They also expect their overall expenses to increase less than expected. So people are pretty excited about that. The stock was a little bit higher. However, look, it's already up, right? It's had a great run here over the last few days. If we just look back over the last 6 days, actually, you got about a 6% rally in Southwest. So just a little tip of the excitement there. It's hard to get people to fire in new money when it seems like they've already bought. So that's that one, Southwest Airlines. Roku, don't know if you guys saw that one today. Stock fell pretty hard. It's about a 14% decline on the day. Comcast. I didn't know this. So Comcast has a service they call Xfinity Flex, which they're rolling out to everybody now, which is essentially a direct replica of Roku. You can actually stream YouTube, you can load up Hulu, you can load up all the other apps in there. And so Comcast announcing that really goes into what Roku is, that's their space, right? Every other streaming service like Disney Plus and Apple and things, those are standalone. Those are their own things. What Comcast has apparently is going to directly compete with Roku, which would be one of the more serious ones we've seen lately. There's other competition, of course, but this one, I mean, that's pretty big. So we'll see. Anyways, investors choosing to just take some profit on that and run away. 72% of the stocks in the S&P are still above the 50-day moving average, and that is the same. We only lost 2 stocks from yesterday to today. One of those was Helmerich Payne. Oil stock that broke back below the 50-day moving average. Other than that, there was one other stock, and that's it. So we're still pretty nice and tight above the 50-day moving average. There were 18 new 52-week highs today. 6 of them were utilities, by the way, so utilities creeping back into the mix as they have been. And one of mention was AIG breaking out. We talked about this yesterday. Looking like it was trying to break out. Technically today, it did just poke above those highs. Looking pretty good there in the short term. Only one new low. That's Altria again. symbol MO if you're following along there. And that's pretty much just responding to, well, you got New York banning the flavored e-cigarettes. Now you have India, which this company, Altria, doesn't have any e-cigarettes of the kind in India. And India decided, yeah, we're just going to ban them anyways. So there you go. Stock a little bit lower on the day. Republic Services Group, we've been playing around with some stats on that one. That's got a nice little gain. It did rally there towards the end of the day. It's up 1.01% from the lows. Got one more day, right? Well, technically into Friday, but it's got one more day essentially to get to the average 1.81% gain there. But all right, so far looking pretty good, a little bit sloppy. And yeah, on FedEx, by the way, 15 of the 20 analysts adjusted their targets there. You had 5 downgrades that I saw. Average price target 167.78. Tomorrow we got existing home sales. That's going to be a big one in there. You got the Philly Fed numbers coming out. That's a market mover as well. Jobless claims. There's quite a bit of econ news coming out tomorrow, so we'll check that out with you guys. You have JP Morgan coming out saying we are raising our dividend from 80 to 90 cents. We own that one. That's good. You got Allegiant paying out 70 cents. Awesome. We own that one. Looking good. And, I think I've basically covered it all for you here today. I felt like there was a lot to cover, so I moved a little bit faster. Facebook apparently working on augmented reality glasses that they hope will replace your smartphone. Awesome. I would totally wear glasses. Like, I'm on board with this. When the whole Google Glass thing came out and they did the marketing for it, of what it was supposed to do, I was on board. I signed up for the beta. I asked for one. I would have totally wore those things. I'd be on the show wearing these things. Imagine that. I could just talk and read off my notes and everything. I am all for it. But Facebook working on that. They said hoping to launch that between 2023 and 2025. So they've been making some adjustments there, working with Luxottica and some designers and stuff to try to make that happen. 100% for it, man. If I could wear glasses, right, and I could walk into like Home Depot and like turn my head and it goes 2x4s over there. You know what I mean? Or if you needed something like from a store. Awesome. You see your grocery list and it starts telling you which way to go. That's where we're going with this stuff. I'm all for it. I support it. I would pay. I always make fun of people for spending like $1,000 on a phone. That would be my advice. If it really worked that well, I'd buy it. I would totally buy it. You guys would see me here and be like, oh, Dustin, spending his dough, man. I would. All right, let's see what questions you have here before you start making fun of me. And we will call this thing a day. We're doing a class, by the way, tomorrow on just the smallest differences, right? So anytime I can offer a small little difference to customers without them having to do anything extra, right? I'm going to do it. And I've been working on this study. We've all been working on it here for a little bit. What happens if you just choose a certain day to make your deposit? What happens if you do a weekly deposit versus a monthly deposit? What are the stats on that? And I don't mean to promote it as if it's going to be some life-shattering thing, but most financial advisors will say, just put in more money. And I hate that answer. I really hate that answer because that only benefits the advisor, right? Only put away what you have to invest for retirement to hit your goal, but then do it as efficiently as possible, and you don't have to stress about it. And so what we've worked on is sort of this data to show customers. It doesn't matter. You can, we don't have fees or anything for making deposits or investing more every other day or something. So I want to find the most efficient way for people to go about it. Super excited to share that with you guys tomorrow in our class. So the invite should be going out tonight as well as an update tomorrow as we start live in the dojo. So Tandra says, what kind of market reaction should we expect next from this Fed? Well, I gave you the stats on that, so all I'll do is go by stats. I don't really have an opinion on that. Average performance 1 month later for the S&P when the Fed cuts rates is minus 1.24%. And so I'll go with that. Geeky, what do you use to determine if a position's oversold or overbought? Those are sort of lagging indicators that you're mentioning there. A lot of people use some distance between the price and the 50-day moving average. I get it. It's also technically a lagging indicator, but something like that. That's probably the most popular in terms of what algorithms use or what some of the bigger companies use, just the distance from the 50-day moving average. You could use the 200-day as well, and you could actually use price relative to history and the distance between the 50 and 200-day. Just depends on what platform you're in. A lot of these platforms will do it for you, so you can set up anything. We basically just set it all up so it's automated. you guys think that the Microsoft news means, I keep seeing some of those comments there. You think that's the end for Microsoft? I don't know. Well, it's holding up there pretty good. Notice how it is quiet and sitting near highs there with the market a little bit volatile. Maybe go over the last couple months, yeah. Why does nobody ever talk about a 457 plan? It's like it's non-existent. You know, I think a lot of times, and I've looked at this, you guys know me and my stats, and I'll study the video topics on YouTube to see if there's a place that I can fit in and sort of make a little mark. I think what a lot of people do is they sort of lump them in, 401k, 403b, 457, and they say, okay, just go with these rules. You're right. There are little minor differences that you could use to make its own video, and I think people just don't do it because how many people are actually going to watch? And at the end of the day, most people on YouTube, they're trying to make the dollars. I can tell you that anybody on YouTube trying to make dollars, you better be ultra famous because these videos are monetized and ain't nobody making a living off these videos. To be honest with you guys, I think this closing beat, we just broke the $20 a video mark. So when I do this for you every day, if I ever go back and look, I make like 20 bucks. Yeah, all this for 20 bucks. Clearly not the reason we would do it. But I think that's probably it because there's just no money there for people that want to do it to make money. If there's something I can help with, I always need video topics, so I'm happy to do it just to help and sort of a goodwill marketing thing. That's really my approach, so happy to do that for you. Cool. All right, moving on, you guys in your Microsoft there. So why has a MasterCard been doing so well? Why hasn't it been doing as well as it's been doing in the past? That sort of stems back to last week. Was it early last week when money started coming out of these real growth stocks and moving into some of the discounted areas? We covered it in sort of detail there. But all in all, it's not that money's running away from these growth stocks. It's just that you could just tell, it's profit taking. The volume is just a touch higher than average. So it's not like people are going all out of MasterCard, Visa, and all these other names and going into retail or whatever. They're just saying, okay, look, I put in $1,000. It's now worth $1,500. Let me take that $500 and go put it somewhere else, or $250 of it or something. It's just profit taking and a little bit of rotation there. Yeah. We'll see. Yeah, on Microsoft, I don't know. She's sitting quiet right now. It's you never want to be the first to guess which way a stock is going to move outside of a sideways range. I don't, but you can try, but like Microsoft just basing sideways there in an uptrend. So you'd have to lean bullish if you're going to have a position there. But if you're the first to guess it and you're wrong, not only do you miss, right? You bought near the high, but now before you admit that you're wrong, you have to suffer the biggest loss out of everybody. So if you break that trade down to try to be the first in a breakout or a breakdown and you missed at the worst possible dollar amount. So I don't like to be the first to dive in. I just think it's too much money to put on the table there. I would rather see it break out first, let it go, and then participate in any pullback after that to give myself a little bit tighter of an area. And if you're like a stop loss type of trader, it just depends on, I guess, what you do. What is usually institutional ownership? Yeah, people say that. It could be hedge funds, could be mutual funds, any of the funds like those bigger sort of, hedge funds are mutual funds. Any adjustments that they make where their mutual fund may have, $300 billion that they have in this one fund. And so adjusting to a different position could very well mean $150 million, right? And so that's institutional size. Our little positions, like the way we sort of move accounts around here, no, it doesn't. I mean, you could say institutional. I could try to be fancy, but we're not nearly on the same ballpark there. Talk about options. Yeah, I know. Yeah, the problem is if I start talking about options, I'll miss the class tomorrow night because I'll probably still be talking about them. That's a passion area for me. But yeah, and I don't want to miss the class tomorrow. Is there a new company in the stock market that has the potential to do close to or what Apple did when they started? If you find them, let me know. Yeah, sounds good to me. It'll be good times. We'll write it up to that 7-for-1 split. There's probably a good point. Some people think the software as a service, there's a lot of these profitable names in there that could be the same. You just have to be, it's not going to be like Zoom. You know what I mean? Zoom is so hyper-focused. So you could probably do some research in there. No, HSAs are great. I wouldn't say overfunding a retirement by using an HSA is a bad thing at all. Nope. HSAs have, I mean, you got to go with tax advantage accounts before you move on to anything else. And so if HSAs are available to you, you got to do it. Yep. Yeah, I think it was just a knee-jerk reaction first with the Roku thing today, but Comcast is not joking around. This was not like a, hey, we're thinking about doing it. This is actually happening, and they already have it. So it's real competition. I think there's no need to feel like you're missing anything by trying to chase the stock at the moment. There will always be some back and forth along the way. How is Jazz Wealth educating clients on the new asset class of digital assets? We don't. I wish I had a fancy answer for you, but don't do it. Nope. Because I can't. I really can't include it. It's not that I don't like it. It's just I can't currently include it. Until it's more regulated and available to be used in retirement accounts officially, then it's something we can cover. I mean, I'm happy to cover it, but for now, it's just, why get somebody excited about something they can't do, you know, or I can't really put in their accounts. Cool. Sorry if I missed, I see the things catching up here, but can you make a private class on how to manage options, risk, put in stop? I promised that I would do that and get it set up. If I could turn the camera around and it wasn't attached to this thing, and you see what I'm working on over here, you'd understand why I haven't done that. I'm literally building the Wine and Wealth class room. It's a full bar, cafe looking thing sort of behind this camera. Studio 3J, I guess, if you will. And so I've been a little wrapped up with that, but I've promised that I would just come in randomly on a Saturday or something and just turn the camera on, nothing crazy or official, and I would just, we'd be in the dojo and just everybody would get an announcement and then we would do it from there. But I will. I think it's going to have to be broken into a couple classes, but I'm happy to do it. If people like that, that's great. Does Jazz sell covered calls on holdings? Some retirees, only for some of our retirees. It has to be really, really particular. It can't be the smaller accounts, the younger people. It just doesn't fit. I can prove the performance is worse in the long run by doing that, so I just flat out say no to the younger accounts. I do have a few retirees that insist on it, and so we do, but not as a mass thing, right? So I don't do it like as a general sort of offering. Yep. Cool. David says, feelings on the housing market. You'd have to argue today that if you are a multifamily investor, you probably already know this, but things are going really well. Single family did well too. I mean, it's not that those were bad numbers. They all beat. It's just multifamily stole the show there. But in general, I mean, how can you really be bearish about the overall housing market? At least from what we have as far as data, nothing's overheated. You have consistent demand. You could argue that supply is a little bit lower regionally in different areas, but I would say generally I'm pretty bullish on the housing market for now. Yeah. Matthew, we don't do it with Folio, so that probably easily answers your question. I think you can. I choose not to do it there because I like the customer to be able to see as well, and they can't actually see it very well. Some things you can't see well on Folio, so we don't do it on Folio. Yep. Rates are low. You're right. Well, hey, I got to finish up this class for tomorrow. I'm super excited about it. I want to put it we spent a lot of time on the data. I want to put it together in a way that's meaningful for people to see and understand. So I'm going to work on that. I appreciate you guys watching. Thank you so much for joining us here today. We'll be back tomorrow, of course, to do this all over again. A couple good videos coming out at 1 p.m. each day on our YouTube channel tomorrow and Thursday. Hope you'll check those out. Focused on some interesting areas there. And enjoy the rest of your day. Yeah, that's all I got for you. See ya.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.